All right. So I'm going to continue, but before I do, I want to make a short video, which is very concise, that focuses on uh, the turning point. All right. And this is the same as how to buy pullbacks or how to identify trend changes, you know, but from the perspective of buying the pullback or, really the entry perspective. What is it that Wyckoff looked for here or here? Meaning for the trend to turn and um, for the pullback opportunity. So I'm going to sum that up into 3 steps, which are almost like a checklist. The first is we can, and this is my own, I put it in the way I understand it, all right, from what is there in the course. So first thing is weak hands are out. All right, weak hands are out. This is an indication that is identified by what? The climax. All right, a selling climax. Oh shit. Weak hands are out. So the selling climax will identify this, because because what it is panic selling. That's what a climax is. So that means weak hands are out. So, all right, 2 strong hands are in. It's the same thing as saying that smart money is in, or strong. All right. Am I doing this? So the check number 1, weak hands are out. Check number 2, strong hands are in. This is identified by a change of behavior. Okay, and that's the same thing as your sign of strength. All right, it's just the first time that you have heavy buying, which is identified by a big move up on heavy volume. That's all. All right. So, when these 2 things occur, one after the other, they should be close to each other, meaning you have the climax and then a change of behavior, or a climax and then a couple of additional waves and then a change of behavior. They should be close in proximity. What does this mean? It means that the liquidation or the climax has passed and the trend is tentatively up. All right, these are the 2 indications. It hasn't been confirmed yet, but it means, hey, opportunity is coming. Opportunity is knocking. You got to be ready to answer. All right. So when these 2 things occur, you had 2 pieces of information. One, the liquidation has passed, at least temporarily. At least. It could be permanent. It could be temporarily. Okay. It doesn't mean take the position. What this is saying is liquidation, that heavy liquidation has passed. It can resume and we can go lower. Make that very clear. You need more indications. The other is that the trend is tentatively up. Now, what does that mean? That means it can create a trend or it can just be a bounce. It may be just a halfway back move. It may just be a pullback. Okay, that's why the word tentative is mentioned. So these two things, where weak hands are out and strong hands are in, these two concepts are represented technically as a climax followed by a change of behavior. The climax followed by a change of behavior is telling you that weak hands are out, strong hands are in. And that is telling you that liquidation has passed, at least temporarily, and the trend is tentatively up. All right? Is it telling you to go long? No. All right. Then the third thing that you see is the low volume test, the low volume pullback after the change of behavior. All right. That is going to do what? It's going to confirm that liquidation is complete. So I'm going to even take out this word here, liquidation, and instead be very precise and just say the climax has passed. All right. Therefore, there should be no confusion, because I know folks are going to look at 2 and 3 and say, "Oh, which one means liquidation and all that?" So forget it. We'll just do it like this: climax followed by a change of behavior means that the climax has passed temporarily. That is what the change of behavior is doing. It is confirming, it is telling you that the climax has passed temporarily. All right. And the trend is tentatively up. After that, when you have a low volume test, all right, a low volume test, that is telling you what? It's telling you that it is confirming that liquidation is complete. Okay. So again, number one, weak hands are out. How do you know? The climax occurs. After that, strong hands are in. How do you know a change of behavior occurs? What is the picture that they paint together when one happens after the other? Meaning the change of behavior follows the climax. It happens after the climax. What does that mean? It means the climax has passed, at least temporarily. All right. And the trend is up tentatively. So the next step is to confirm that liquidation is complete. The confirmation that liquidation is complete is indicated by your low volume test. So if we take a look at this chart here, you see this leg down on the left-hand side where I show an increasing trend line of volume. That right there is liquidation. That right there are weak hands coming out. That right there is what? Is retail exiting their positions. That right there is what? Panic selling. All right. So panic selling, climactic volume, right? And then after that, you have your change of behavior, that big bar right there with the follow through. That big bar is telling you that the climax has ended, at least temporarily. And the trend is now tentatively up. It needs to be confirmed. It is confirmed by the next swing down, and you see the trend line on the volume going down, which is telling you that yes, liquidation is complete. How do you know? The volume is decreasing. As the volume is decreasing on this swing, if you compare this swing to the prior swing, you will see it has much less volume. That's why there's a trend line that's going down, whereas the former swing had a trend line that was going up on the volume. So liquidation is complete. Why? Because the secondary test has far less volume in it than the prior swing. There you go. Liquidation is complete. Okay. All right. Now for the after that, you need to move. Step 4 is that to confirm trend. How does this occur? It's your higher high. So for after liquidation is confirmed to be completed, you need a higher high. And I'm going to say preferably with a breakout bar. Preferably the higher high has a breakout bar. Okay. Where's the breakout bar? It's right here. That's the big strong bar over here that after liquidation was completed, you had that nice big breakout bar, right? Similarly, over here also you have that. Over here you have a breakout bar here that, is there, but it's also over here. Like, it's also breaking out over there. It's here and it's here, making that lower low here, making that higher high there. It's here as well. So after liquidation is completed, you need confirmation of trend. That is indicated by your higher high, or, if it's a downtrend, lower low. And preferably, you want to have a breakout. You need to have a breakout. There's a couple of things to be said about this without getting too complicated. The breakout sometimes it's in the change of behavior wave. Like over here, this is if you consider the entire swing, this is your change of behavior wave. If you consider this swing, this is your change of behavior wave. It generally is in your change of behavior wave also. So somewhere in there, you need to see that breakout. All right, in this sequence that creates the higher high, that confirms trend, look at the structure of the change of behavior as well as the higher high that creates trend, and look at the bars. Somewhere either in the change of behavior wave, which is where it usually is, or the higher high, there will be a strong big bar that is doing a breakout. That should be there. All right, because that's the bar that breaks the downtrend. That's the expression of demand, a very critical bar. There are two bars that in the formation of trend are critical. One is typically that bar that I'm talking about that breaks the back of the trend, and the other is the markup or the markdown bar that occurs after your lack of demand or lack of supply. And I'll be going over that later. But with those two types of bars are the markup bar and the markdown bar initiate markup and markdown phases. The the big bar in the change of behavior breaks the back of the trend. I mean, it just breaks the trend. All right. So those are two solid technical indications that you're probably not going to hear about a lot in a schematic. Um, but those are the ones. The ones that Wyckoff has mentioned so far is the bar that broke the back of the trend in this study, and that's, he mentioned, that's right here. This big bar down, that big bar down that occurred after the climax and the change of behavior and then breaks, is the bar that breaks the back of the uptrend. And that means that's it, done. That trend is broken. So what are the possibilities? Possibilities are typically it's just going to go into markdown, or it's going to consolidate, then go into markdown, or it's just going to consolidate and reaccumulate, shake out, and then go up again. This is usually what happens. The other thing to mention about this is that typically it gets tested. As you can see over here, it's being tested. It's like it's forming resistance. And markets will test once or test twice or test 3 times, but they won't be able to get above this because strong hands are defending it. Same thing here on this breakout on the upside right here. What happens? It gets tested. So it'll get tested. There'll be springs. There'll be up thrust in this case, but this will be defended. It's very hard to get below this bar, out of the range. So the test will occur against this area, and they'll fail. The test they will fail to penetrate the bar. All right, that's about it. Okay, so just considering from a perspective of what we learned so far, what is this? It is telling you weak hands are out, strong hands are in, telling you the climax has passed. Then the secondary test, which is telling you the trend is either tentatively up or down. And then finally, confirming liquidation is complete. When liquidation is complete, you still need to confirm trend prior to getting in. Yes, White House tells you, okay, get in at the lows and all that. But that, from my experience, especially on lower time frames, you want to wait for the confirmation of trend because there's a lot of traps. There's a lot of traps, and on lower time frames, you just, especially in these markets today, they have a tendency to take advantage of FOMO, and what that leads to is early entries. So once those early entries are in, they will get stop run. So just wait for, like over here, for example, if you wait for this higher high, you have a pullback that's basically right here, and you get in. Over here, if you wait for this lower low, yeah, right here, you still get in, right up here. You see? You still get in. It goes down, up, makes a lower low, and you still get your entry. Over here on the long side, you go up, down, higher high, and you still get your entry against the breakout bar. All right, so what's the point of getting in early and what happens is when you get in early, typically your stops are in the long location. And you know what happens then is those are the areas that get targeted. All right, so as part of the checklist of identifying when a move is about to resume or a move is about to initiate, what you want to do is, one, weak hands are out. Our weak hands are out. And now what I'm doing is explaining this conceptually, not just technically looking for from pattern. Okay, weak hands are out, strong hands are in, and all of that. So now I want to show a practical example. All right, so this is an intraday example. And I'm going to be looking at this wave chart right here. Okay, so look at the wave chart, and you'll see that this applies on intraday basis as well. So it's going down. All this red is going down, right? Down, 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 down. Now, what you'll notice from a perspective of volume is this low right here had a lot of volume. It has more volume than the last 13 waves. It has about 34,289. That's more volume than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, all the way back here from the initial selling. Okay? So market is in a downtrend going down, 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 bang. And you have a big move down, relatively speaking, bigger than at least the last 8 waves with a lot of volume. All right. Now, by itself, I cannot judge. All right. I don't know. It may continue to go lower. I want evidence that this is the climax and this has passed. I want that evidence. Otherwise, how would I know that maybe this is the climax, right? Up here, that could be the climax. Or I don't know where this could be the climax, could bounce and go lower, and there'll be another climax. So you don't really know which is the climax. So I want evidence that the climax has passed. And as I've explained, you need that because you need that evidence by way of a change of behavior or demand. Here it is. That demand is confirming that the climax has ended. I mean, not just temporarily. I don't want to say the word confirm. All right. So I don't know how else to say it. All right. So I'll just say it in a way that is, I have to confirm that the climax is a climax and that it is passed, at least tentatively. So the climax and then change of behavior. This change of behavior is telling you the climax has passed, at least temporarily. And look at this volume. Isn't it brain dead obvious? It's obvious, right? Like, do you think this is, you and me? You know how much trade? 94,757 contracts on that wave on an intraday basis occurred. 94,000 plus contracts occurred here. So now I confirm that the climax has terminated. All right. So what is this telling me conceptually? It's telling me that weak hands are out and strong hands are in. Bingo. Right? So weak hands are out, strong hands are in. That's what I'm looking for. Right? Now, does that mean you go long? No. All right. This could only be temporary, and it can only be a little bounce, and selling can be resumed. All it means at this point is the climax has passed, at least temporarily, because of the demand that has come after the climax. That's all it means. So now I continue. What am I looking for? The testing process, which are these following waves. And I'm comparing these waves to the climax to see two things. One, whether the waves are going to break the climax low or whether they're going to hold and they have far less volume. because I'm trying to confirm. What am I trying to confirm? That liquidation has passed. Clearly see here that let's see the volume on the down wave. So let me replace this by volume. What I did, was it this? I forgot which. Anyway, the point here is that on the climax low, it's 34,289. On these waves, this is only 3,400. That's 1/10 of the climax. This is only 8,000. That's less than, it's about, what was it? 16, 24, 32. This is, it's 1/4, about 1/4. Here, obviously, it's only 931. 931. Like, what's that telling you? There's nothing here. So for sure, on these waves are confirming that, what are they confirming? Liquidation has been completed. At that point, here confirms that liquidation is complete on these small little waves. All right, the little waves are the ones you need to be paying attention to now. I know that a lot of the practitioners, they're always looking at the big waves and saying, this is your sign of strength, this is your climax, whatever. You have to understand, before big moves occur, you have little waves, not big waves. Big waves are preceded by weakness, and that weakness is indicated by little waves with small volume. It is not preceded by big waves. The weakness begets the strength, which results in continuation moves and big rallies. Here you have the little waves, and you must be able to judge the small waves like you're judging the big waves. And the small waves are telling you that liquidation is completed. How do you know? Well, this small wave has only 931 contracts. This one has only 796 contracts. This one has only 1,000 contracts. This one has about 1,400 contracts. It's getting ready to blast off. So it's the little waves here that confirm that liquidation has been completed or that selling is completed. And obviously, you're going to get a move. Okay? And it's going to go. All right? So the liquidation has been completed. All right, so you're 1, 2, and 3. Now, the fourth piece is just because liquidation is completed, actually, this is the place to go long, but we look for trend confirmation, all right, which I strongly urge because there's too many traps in the market. And here is the higher high trend confirmation, right? So step 1 was 1, weekends are out. Step 2, strong hands are in. Step 3, liquidation has complete. Step 4, high trend confirmation. With this, you have the emergence of trend, meaning the birth of trend. Right at this point here, for lack of a better word, trend is born, or trend is created, or trend has been fashioned, or trend has been something. All right, so whatever. The point is, at this point, you have trend. The rest of all of this before it was the process of creating one trend and ending the prior trend. The prior trend ended with what? With this. The climax, where weak hands are out and strong hands came in. All right? And it was confirmed by the uptrend being created. So that up to now, up to this point, you had downtrend. From this point to that point, meaning from point 2 to 4, you confirmed that liquidation was completed and trend was created. And now you have a shot for a really big move. All right. So this is how, this is what Wyckoff was explaining. Where here you had your climax, step 1, which tell you liquid, whatever those, they're out, weak hands are out. This was 2, which strong hands are in. This was 3, right here in that box, which had low volume, which was telling you that liquidation is completed. And this is 4, the creation of trend, the 4th move. All right. Again, on the upside, how the uptrend turned to a downtrend. Here you had the climax, which tells you that weak hands are in to be distributed to. They're in, they took the distribution. Then 2, that right here is the strong hands coming in with short positions. And then 3, like over here, you'll have lesser volume, obviously, right? It's like you take a look at this and this. It's like from this leg, from this swing low to this swing high, you have volume increasing. From that leg to this leg, it's also very good selling over here, right? So this is also very high. And then on the pullback, you have from here, you have this block. Just make sure I'm doing it right. So compare this to this, all this selling. This is the pullback that's telling you that demand is spent. It's the same logic in reverse, that over here you had you're comparing this leg. Let me just make a box. This leg here to this leg here, and you will see that this leg here is much bigger than this leg here in terms of its volume. So what does this mean? It means that means 2 things. One, that the climax occurred and weak hands are in, meaning they're being distributed to. And then over here on this box, it means what? It means demand is complete, meaning that distribution is basically complete. It's the same concept as liquidation being complete, but the buying here is complete. All right. And now you could also make the case that, okay, what about this? It's the same idea. I mean, like here also, it's trying again, but you see that's even lesser volume. See? So you just need to compare the climactic leg to its tests. And you'll note that the tests have significantly lesser volume, at least half of the volume. If I was to add up all the volumes, you would see that the climax typically would have at least double the volume of its tests. So if this was, say, about a million, actually it would be 5, 6, 7. Let's just say this was 30 million, right? Or 20 million. This would be about 10, and this would be about 10 or less. And this middle piece here, this middle piece that's going down, this would be the heaviest selling wave out of all the waves of the selling waves. Out of all the selling waves, this would be the heaviest selling wave. Anyway, long story short, the idea is the same. Again, on the long side, let's just write it down. Weak hands are in because distribution is occurring. Strong hands are out. And by strong hands being out, I don't mean that they're out of the market. All right, so let me say are in distribution. Strong hands are also in, but more from the change of behavior perspective, meaning they've sold, right? They've sold to the weak hands. So this would be in the form of a climax. This would be in the form of a change of behavior. This would be in the form of the low volume test would be in the form of like lack of demand, meaning demand distribution is complete, basically. All right. That means distribution is complete. And then 4, the lower low, which means that trend is confirmed. All right. So again, for step 1, weak hands are in. They're being distributed to in the climax. 2, strong hands are in. And what I mean by in is they've sold. They've sold to the weak hands. Okay. Then you have lack of demand, which I'm telling you that distribution is completed, just like you had the liquidation being completed, right? Here, distribution is completed, and then 4, trend is confirmed by the lower low here. And it's game over. It is game over. Once this sequence occurs, it's the markdown is going to occur. But again, this is probabilistic, and they are what you need to know is there are trends and counter trends. So counter trends will have this same sequence, and what the counter trends are doing, right? Because you have 2 types, you have trend, counter trend, is they're going to just go down to a level. So what you'll have is a situation where, let's say, you have all of this, weekend distribution, blah, 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 all of that occurring up here, right? The counter trend would, on a lower time frame, will just be a swing on a higher time frame that's going to be testing. So understand that this is going to look like right, so that top is going to look like where you have your climax, you have your change of behavior, then you have this, then all of a sudden it makes its lower low right there with all that behavior, and all that's doing is going to test. And right here, all of this sequencing is occurring right here. Okay, which mirrors this higher time frame turning point. Is all of this where you have your climax indicating that Distribution has occurred, the change of behavior, which strong hands are in. And what is that telling you? It's telling you that climax has passed. Then you have your pullback to test that has much less volume than the climax. What is that telling you? It's telling you that distribution is complete. And then you have a lower low. What is that telling you? The trend is created and it is confirmed because you have a low low and all of that sequencing in the background. And then the pullback entry, and then it goes down, and this is your counter trend, and it's just going back to test a level. So you have to understand where you are in the grander scheme of things in a higher time frame to identify whether it's with trend or counter trend and what the levels are. And I'll get into all of that later too. All right, lesson done. Take care. Bye.